Hello everyone, welcome to BISP Solutions. My name is Payal Makijani and today we're going to learn about enterprise planning and budgeting cloud services. And so let's move on further with EPBCS. It is now known as planning in the Oracle EPM cloud. EPBCS is similar to PBCS in that it comes with modular based planning offered as standard cloud feature. In addition, EPBCS comes with custom planning, free-form planning, and customized Groovy scripts offered as enterprise cloud features. Pre-built content can be gradually customized to your own planning needs, and all modules can be integrated with each other. End users can create custom planning and forecasting models and get up and run quickly with purpose-built planning modules that include pre-built calculations, dashboard, and reports. Some of the features of Oracle planning in the cloud solution includes decision-oriented plans with an instant feedback loop, which meet the objectives of our business by creating goal-oriented driver-based plans, reports, and dashboard. It helps in continuous planning solution to suit our business need. Now we will learn about creating an application. So let's move on to our cloud. This is our cloud application where we will build our planning application according to our own requirements. Let's remove this particular application and we'll start building our own application. Remove application. Yes. You could either create your own application when at start of planning process, or you can also upload the snapshot you have when in between the planning process. So EPBCS, it's a demo application, and the application type we will select is modules. Next. Now here we will create our planning application according to the planning requirement we have. Like we are doing planning for the from the financial year 2021 to financial year 30, and our fiscal month, first month of the fiscal year would be January. Weekly distribution, let it be even distribution. And next, this would initiate the application creation process, and status is visible in our screen. After creation of a application, we the next process is of configuration. So let's move on to that. In our application, this is our home screen, and while clicking into the application and configure, you will get into such page where on the right hand side of the strategic modeling, click on the drop down menu and click onto the financial module. On the very right hand side, click onto the enable features. Here I have already enabled all the features I want in my own application. Click on to enable features. Enable all the revenue, like what kind of revenue accounts you want in your planning application: accounts, drivers and related accounts for product or for services. Enable expenses, accounts and drivers related expenses, and income statement, what kind of income statement you need in your own planning application, that is for as per gross profit or contribution margin, or enable balance sheet, driver based and accounts. Enable cash flow statement, direct or indirect depending upon your own financial need, and create all the dimension. You can also create custom dimension, like here I have created market dimension, and define the selected features for the same and enable. After enabling the features, you will get the confirmation message that the features are enabled, and then okay. After enabling features, you get into such page where all the we will define the planning period for current fiscal year, financial year 23 period November, and plan start year. We could start from current fiscal year or next fiscal year depending upon our planning needs. Here I am starting from current fiscal year. We will plan for the December month for the financial year 2023, and I will click on to plan for financial year 23 monthly, and then rest we will do quarterly, and for the financial year 26 I plan to do it yearly, right? And then we can click on forecast, and uh, I have selected monthly as my forecast period. Save and close. Right, so here I defined my planning and forecast preparation. You will have to define the entities and the market. You will have to upload the metadata for entities and market and product, and then this is how this is here we complete with our configuration part. Let's move on to our notepad. So in EPBCS application, what are the steps? First, we create an application. Second, we do the configuration of our application. Third, we upload metadata. These are the three things we did currently. Now let's move on to the setting of user variables. Setting up of user variables act as a filter, and filter for forms. Which enable planners to focus only on certain members. Let me explain how. First, we will click on to tools and variables. First, we will define all the variables in our application. Here, entity, I will define total entity. Okay, then I will define the scenario. Version, year. I want all the, I will do the planning for rest of all the years. So I defined my user variables. Save. Okay, now click on to user preferences, and you will get into such page where click on to the user variables. Okay, here we will have to sign out and sign in again to refresh all we have configured in our planning application. That's yes. Now move on to user preferences. In user preferences, by clicking onto the member selector, we define all the zero level member um, to each dimension, and then when we click onto the revenue, by click we have we get into this kind of page where we have options like overview, direct data input, sorry, driver and trend based direct data input, right? And we will click on to the direct entry, and we shall get into this form. Okay, for the financial year 2023 we are doing all years 2023. Okay, see, this kind of form shall open. Now I told you in the yesterday's webinar as well, the planning in EPBS application is done in three ways. That is, one, direct data input, driver based planning, and trend based planning. Here I am telling you about that direct data input, where you can directly input the data in in a data form, and you can plan accordingly. Like for product revenue, I can say for quarter one for the financial year 2023, my product revenue was 50,000, and for quarter two it was 75,000. For quarter three it was 89,000 respectively, and for quarter four till now it has been uh, 1,20,000, right? And we can save it and see the total revenue till now we have, right? And then we can define our expenses like labor expenses, material, overhead, freight, and other expenses as such. Suppose my labor expenses was 20 22,000, my material was 42,000, so here 10,000. So here I will know how much gross profit do I have, that is 18,000 for the quarter one, right? This is how we can plan to direct data input. Now let's move on to our driver based planning. Now, what is driver based planning? Driver based planning, or the driver based modeling, is an approach to financial planning and analysis focused on identifying an organization's key business and value drivers, and then creating business plans and budgets based on these key drivers. They then help develop business acumen, collaboration, and understanding on how those drivers lead to actionable outcomes and results. In the face of increased market volatility, a fast changing business environment, a global uncertainty, a driver based planning helps finance and the business makes more proactive towards the dynamic condition of the environment and forward looking decision making, and create a more agile organization, right? So how driver based planning works? The goal of driver based planning is to focus business plans on the most critical factors that drive success. It uses financial models to run different scenarios based on these drivers, allowing finance and the business to understand the impact on projected business results. It further connects individual business processes, tactics, and strategies to different set of financial results and outcomes. For example, driver-based planning can be used in the long-range strategic planning processes where finance needs to project long-term trends for revenue and costs. Key business drivers will also vary based on the industry and company. Here is the example for the driver-based planning where um, where data is derived from different drivers which are off chart and result come out on the face of the income statement or the balance sheet. So, uh, what are the benefits of driver based planning? First, driver based planning helps in sharpened focus and precision in financial reporting. Now, what it means is driver based planning improves the accuracy of forecast because it allows the organization to focus on the data that has the greatest impact on revenue and expenses such as cost of goods sold, right? Now, it also helps in increased finance and business alignment. Driver based planning unites the business and finances on a common set of metrics and framework for evaluating the future. For example, finance, marketing, sales, manufacturing, and other teams can all play a role in identifying key driver key drivers within their departments, and they can set an impact of their activities on financial results. Driver based planning helps in greater business agility. Agility can be hard to achieve with a traditional budgeting and forecasting process, but the across functional collaboration that a driver based system requires gives you greater visibility and transparency about each department's drivers throughout the planning process. It also improves efficiency and effectiveness of the decisions. It Driver based planning software saves a lot of time and efforts in financial budgeting and forecasting. It If you focus on key business drivers rather than line items, you will save time during your initial budgeting and during your financial forecasting throughout the year. Now this was a theoretical part where I was telling you about the driver based planning. Now let us understand it with the help of an example. Here is my financial data for the revenue sector of a company. Here I have, here the company is earning revenue from a five um four four services. One is audit and assurance, second is consulting, third is financial advisory, and fourth is risk advisory. This is the data from the financial year 22, 23, and 24, right? So now here I have defined all the drivers of these revenue. Suppose for example, audit and assurance has a driver named number of audits um, the company has performed and the audit fee per entity, right? The number of audits, suppose in 2022 a company performed 50 audits and the audit fee was 1000 per audit, so the total revenue is 50,000 rupees. Similarly, um, when we see for the consulting, right, number of clients handled by the company and the total hours of consultation per year has been given into consultation, fee per hour onshore and fee per hour offshore. Okay, and the total fee charged and the total revenue occurred in consultancy revenue. Same happened with financial advisory. These all are the drivers: number of clients, total hours of consultation, fee per hour. These are my drivers, which I'm gonna incorporate in my planning uh, process. And same with the risk advisory revenue, number of clients handled by the company and the fee charged with each of the client respectively gives my the risk advisory revenue. And by adding all these revenue, my total revenue for the year arises. And now uh, here 2022 is my historical data, right? 2023 is my actual data for the year. This is my present data, right? And 2024 is my budgeted data. This is the data I'm assuming I can get based on the drivers. It could not, right? So this will be all incorporated in our planning application. So let's move on to the cloud and see how it works. So let's move on to our home page. First, we will have to create a drivers in our application. So click on to the application, move to configure card, go to financials, enable features. Now we are working with revenue accounts, right? Click on to revenue and service revenue. Here we have category as service revenue, product revenue, cost of sales, income statement KPIs, revenue KPIs, and gross profit. So Let's move on to service revenue. Here we will create all the drivers we have. Suppose we have number of audits is our one driver, actions, add, control C, control V, give it alias number. My time balance would be flow, my data storage would be store, and data type would be non-currency, and save, right? Similarly, create all the drivers you need for your planning application. This would be currency. Choose your data type wisely. Save. Here I will quickly create all the drivers. Number of clients. It would be non-currency. Save. Add new one. Total hours of consultation. It would again be non-currency. Save. Add. Onshore fees. This would be currency, right? Save. Action, add one more. Offshore fee. This would be currency as well. Then save. Okay. Add. Total fee charged. This would be currency again. Okay, save. Now we will create a revenue in the gross profit. Add. One would be our audit and assurance revenue. This would be currency. Save. Again, add consulting revenue. This would be currency as well. Then save, close, refresh database. There's some error. Member name and SR must be unique among similar names. is, let's search finish name and both. अरे यार, I think there is some problem. Let us fix that and then we. Okay, so now total fee charge. Here I would give it a formula that total fee charged equals to on show fee plus off show fee. Okay, or validate member of variable. Very good. I think there is some problem with the application. So let's continue about driver-based planning tomorrow at the same time. Thank you for your thank you for learning.